another income major, albeit it's not a company historically you would necessarily have thought of in this way. It's a company whose dividend payout has climbed the ranks in recent years, despite being quite a topsy-turvy period for the company Mondi itself. It had the big packaging and paper boom in the pandemic as everyone was sending parcels. Then it had to deal with the divestment of its Russian operations as Russia invaded Ukraine. And since then, it's dealt with a real slump in its end markets. It's had an approach for DS Smith that didn't come off. It's had other acquisitions in the meantime. So really all kinds of things going on here. Valeria, why don't we start by talking about why in the near term it's been over the past year or so, it's been quite a tough year for the company. What are the factors behind that in particular?
Yeah, so in terms of the share price, it's down 30% over the past year. But actually, if you look at the performance, I wouldn't say it has been a disaster. In fact, it's held up pretty well given the backdrop. So in the first half, EBITDA was flat, which is quite impressive in a weak market. But it feels like a bad year because profits are well off their cycle highs. And yeah, that pressure is coming from a few angles. So first of all, the packaging and paper sector is in a down phase at the moment. So there's too much supply of container board, which is the paper used to make cardboard boxes, basically. At the same time, demand from end markets such as construction and also German industry is still very soft, and that's meant that prices have come down, and that's hit margins across the sector. And then also uniquely to Mondi, last year was a year of peak investment. So it spent nearly €1 billion on big expansion projects, and that's soured sentiment because obviously free cash flow has taken a bit of a hit, and the benefits of that we won't be really seen until next year. And then if you layer that on top of higher input costs like energy and wood prices, and then also currency headwinds, you can see why earnings have been under pressure and also why investor sentiment has soured quite a bit.
The flip side of that, of course, when a share price falls, is that the dividend yield increases, and Mondi does have a very good track record when it comes to payouts.
Yeah, so the dividend yield at the moment is around 5 to 6%. One thing that obviously we pointed out in the income majors piece is that cover is quite tight right now. But yeah, as you say, has a good track record of keeping paid through the cycle. And at the moment, it has enough liquidity to at least keep it stable. But analysts do think that, once earnings recover, it can grow again. But the policy right now is to run with 2 to 3 earnings cover on average. But obviously, when profits are down, it can sort of dip a bit below that, knowing that that will be rebuilt once earnings recover.
Mm. And it was interesting too, wasn't it, that even with the divestment of the Russian business, there was no dividend cut then, so it clearly is quite committed to this payout. Let's talk about what the company's been doing in a bit more detail. You talk about the investment period, the peak investment moment is perhaps now past, but where has that money been going? What's its end goal really with all this?
Well, the end goal really is to sort of rebuild the earning power that it lost when it had to sell the Russian business. But at the same time, as I said, with the packaging sector being in a down market, it's actually a good time to build new capacity and buy assets because it's cheaper. And also, the payoff really comes when demand finally recovers. But what they've been doing is spending heavily on big projects, like upgrading mills and things like that. It's been a 3-year investment program, and overall, it's committed to spending 1.2 billion euros. But yeah, as you say, most of the heavy lifting is done now. So hopefully the capex bill should start to fall. And then they've also bought the Western European assets of Schumacher Packaging, which is expected to increase capacity by over 1 billion square meters. That includes 2 mega box plants in Germany, and is expected to contribute to earnings from its first year.
Yeah, it is interesting to think about you're in this backdrop where there is excess supply, but if you're someone who can hoover up a lot of that supply yourself due to those low prices, as you say, then you're in a good position potentially for when things turn. What do we think the catalyst might be for a recovery for Mondi or the end markets? You spoke about Germany there. It's exposed to construction, as you said, as well. What kind of things might prompt a turnaround?
Yeah, so we're not really seeing many sort of green shoots right now. 2025 is expected to be soft still, but yeah, in terms of things that could spark a recovery from conversations I've had with analysts, one of the sort of big things would be that a lot of the factories in Europe that are currently loss making, if those were closed, that would sort of tighten supply and lift prices. And then secondly, in terms of a recovery for a demand recovery, um, construction is around 20% of Mondi's earnings, so it's quite a big exposure. Germany is 17%. So if government stimulus does come around, that could be a bit of a boost. And if those two things happen at the same time, then that could set Mondi pretty well for the next couple of years. But I think crucially, the fact that it's invested so much through the down cycle, as you call it, is it has a really modern asset base. The capacity expansion projects that it's nearing completion are expected to deliver really attractive returns, and then obviously with Schumacher as well, this should boost earnings. So once demand recovers, which again, it's not super certain, Monday should be well set up for a big earnings rebound.
Really driven by the amount of free cash it could then produce when, certainly as capex eases off, and then potentially if revenue continues to increase as well.
Yeah, so Jeffries recently published some forecasts on the free cash flow yield. So yeah, as I said, Mondi spent almost 1 billion last year. So free cash flow was in negative territory. There's still the final payment of that 1.2 billion investment program that I mentioned for this year. But looking into 2027, that's when Jeffries expects the free cash flow yield to go into the double digits. And then if capex spending finally tails off completely, then it's looking at 15%. So
Yeah, which is a pretty high level, if and when if and when they get there.
yeah.
But a potential turnaround, and certainly as with GSK, you are being paid to wait with a decent dividend yield.